Hello and welcome. As silver prices hit a record high, crossing that 1 lakh per kg mark, we speak to Senior Business Economist Sanchita Mukherji and Center for Domestic Economy Policy Research, the president there, Jaijit Bhattacharya, on what this means for investors and what this means for consumers amid rising geopolitical concerns and the Israel-Iran conflict escalating. Sanchita, first to you. For those wondering what does this mean for investors, they are flocking to the safe haven amid the rising geopolitical concerns and they are getting higher returns. What would you say?
Thank you so much for having me on this show, Sakshi. It's always very relevant questions that you come up with. And yes, it is a very challenging world that we live in today, even for investors. And there are various asset classes. Investors have spread their bets across, from equities to debt to real estate to gold to silver. There are certain countries where investors look at cryptos and all of that. But having said that, I would like to reiterate that this is not an investment advice. It's a general discussion that we are having. Yes, for sure, we see that gold and silver, particularly, have rallied substantially over the last couple of years, given the tensions in the Middle East, the deteriorating fiscal outlook of US balance sheet, things like that. And, lots of central banks are actually buying gold, for example, as a safe haven bet. Silver also follows the lines in terms of geopolitical uncertainty. There's a scarcity of the metal. It's used industrially in a lot of places. So the scarcity is actually driving up the prices along with the geopolitical tensions. For a layman investor, it's very important to know that for a retail investor, for example, that these are very, very volatile commodities. Much as the geopolitical uncertainty looks very heavy at the moment, for example, gold for the longest years, once it had a bear run for almost 20 years, right? Let's never forget that in the 1990s, things like that. So when you're talking investments, we need to understand that whether it makes at all sense for you is what a retail investor needs to look at its own portfolio and answer. For example, right now there's a risk off, risk on sentiment in the equity markets. It's very volatile, right? And it all depends on the US's outlook, whether it'll reduce the interest cost to its economy, things like that, whether there'll be an interest rate cut and all of that. So risk on, risk of sentiment is something more or less a lot of investors have come to terms with, especially people who are savvy investors who have been in the markets for a very long time. But a lot of investors are very new to the commodity cycle, especially gold, oil, silver, all of that. So the volatilities need to be factored in. For example, if it's not a one-way street, whatever goes up also comes down. We have to be cognizant. Tomorrow, if there are positive news on the geopolitical front, on the US front, on the Middle East front, these prices might correct and there might be a sharp correction. So one needs to be very, very cognizant of that fact, and whether at all it makes sense in a person's investment cycle is something that a person himself or herself has to come to terms with.
Absolutely, and that's really from the investment perspective. Jayajit Bhattacharya, what would you say to those wondering, okay, where are these rising geopolitical concerns going to take us then, and what does this mean for the consumer? Should the consumer be buying more precious metals such as silver or not?
Let me just step back into what was used to be the wisdom of the Jews. And their wisdom was that one third of their assets should be in liquid cash because that's what they need to use. One third of it should be in land because that's where wealth really gets managed. It gets preserved, and one third in gold for the reason that if there is a conflict or if there is any reason for them to run, it's easy to carry gold. It has a lot of value in it. It is a universal mode of exchange, at least in the past, and it continues to be so. Right, and that's where assets were divided into one third, one third, one third. And if you see, based on the rationale, gold is invested into when you perceive there is risk because you can take it and run with it. You can't take land and run with it. You can't carry cash. You can get robbed. But with gold, you can, right? And that has been the historical reasons why the gold prices have spiked whenever there has been a perceived risk in the world. Now, I don't need to explain that there is a significant perceived risk in the world right now, and who are facing this risk. It's not the middle class who's facing the risk in terms of wealth erosion. It is those who got significant amount of capital in their hand who are facing the risk of wealth erosion. Because if they're keeping 100 crores of money somewhere, what will that somewhere be? If it's in rupees, there is a risk that rupee value will depreciate, and therefore the actual value of the money reduces. If they keep it in land in, let's say, Israel, they wouldn't find any buyers over there, and so on and so forth. So it becomes a real problem as to where you keep your wealth, which is why the stock market is another new market that has got created. New, I'm saying, in the historical sense. So stocks and commodities are another set of markets that we have now. But with this uncertainty, you don't know whether the stocks will go up, whether the bullion will go up, whether the commodities will go up, or they will come crashing down. And that's where, when you can't predict because things are going up and down so quickly, you find gold to be a safe haven.
Right.
Once you start buying gold, the prices go up for everybody else. It goes up for the middle class also, and therefore they tag on to the belief that it's a good investment, and it is in the long run. It is, because even though it may be static, as was clearly pointed out, it has its days, but over a period of 20-30 years, it has given a return which is above the inflationary rate. And that's really what people are looking at. It's not really an investment, as was clearly made out. It's not an investment in the same way that you invest into stocks, but it's a wealth preserving asset. Over a longer period of time, it preserves your wealth. Otherwise, if you recollect, in the 1990s, the highest salary used to be 3,000 rupees. Now, you have salaries not below a lakh for people who are starting a job, right? And that's the kind of inflation that has happened. Gold preserves that value. So an ounce of gold in 1990 will have the same value in terms of its ability to be exchanged and buy other goods as it is in 2025.
Right. Sanchita, do you agree? And of course, too many youngsters now are saying that, look, silver is the new gold and turning to silver then. What would you suggest?
One has to really study it as an asset class, because what happens, especially for youngsters, when they are evaluating certain things that they need to do, uh, returns cannot be the driving force, right? One has to understand the volatility of an asset class. One has to understand the risk more importantly than the returns. So, whilst silver might have rallied 30% this year, which it has, now there are certain factors which has led up to this kind of a rally. Like I said, scarcity of the metal, not enough being mined, geopolitical tensions, all of that. Will this sustain in the short, medium, and long term? Is it viable for that person? Again, it all depends on that person's own risk assessment, risk weathering ability, investment horizon. Is this person a trader? Is this person an investor? Are they doing it for a short term gain or a medium term? All these factors come into play. And more importantly, I think the risk assessment of an asset class is very, very important, because it can move either ways. Like the gentleman my fellow panelist just mentioned, short term volatility is there. And it can go up, it can go down. I mean, are you willing to weather that kind of volatility? Are you a long term player? Gold once had a bear run, as I mentioned, in the 1990s for almost 20 years, right? Post which, because of the inflation in the world, it's a very good hedge against inflation. It's a very good hedge against wars, geopolitical uncertainties. It did its rally. But let's never forget that these commodities also have their phases. So one needs to study that in greater detail and understand before taking a drastic call.
All right. Thank you so much for sharing your thoughts and, of course, for this insightful interaction. Amid rising geopolitical concerns, we are seeing the safe haven appeal for precious metals rise. And that really is something we need to continue to track. Thank you.
Thank you.
Thank you.